Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing world of corporate filings. Today we're diving into something a bit spicy, involving private placements and cryptocurrency. Buckle up, it is going to be an interesting ride. Before we dive deep,
If you like getting straight financial insights without the corporate jargon, make sure you're subscribed. And join our Discord community linked in the description below. It's where we break down these filings even further.
Alright, so what we have here is Greenlane Holdings, Inc. filing a Form 8. Think of an 8K as a way for companies to announce big important news that isn't part of their regular quarterly or annual reports. And this news is pretty big. The main story today is about Greenlane Holdings entering into some crucial agreements. Basically selling more of their stock and getting some fresh capital. They've inked what they call subscription agreements.
So, on the 20th of October 2025, they made deals with some serious investors. They're selling shares of their class of common stock. Let's break down the two main parts of this deal: the cash offering and the cryptocurrency offering. First, the cash offering. Greenlane is selling over 3 million shares of their common stock at $3.84 per S-share. They're also selling these things called pre-funded warrants. Think of warrants as options to buy stock later at a set price. In this case, these warrants are essentially a way for investors to buy stock for a penny, which is a way to structure the deal.
They're getting cash, US dollars, USDC, or USDT, which is a stablecoin, as payment. Then, things get more interesting with the cryptocurrency offering. They're also issuing pre-funded warrants here. But this time, the payment is in Bera, which is a digital asset on the Barricane blockchain. The price they're using to value Bera for this deal is around $1.94 per token, which gets a discount.
Put it all together, and the company is raking in about $110 million from both of these offerings. That is a significant chunk of change. They plan to use this money to buy Bera for their treasury and for general business operations.
To make all this happen, they hired Aegis Capital Corp. to act as their exclusive placement agent. This means Aegis helped find the investors and put the deal together. For their trouble, Aegis is getting a commission, a percentage of the money raised, plus an extra $5 million. They're also getting reimbursed for expenses, which usually means legal fees.
Now, what's really interesting here are some of the promises Greenlane is making as part of these agreements. They're adopting a new treasury policy. This means their reserve assets will be a mix of cash and cash equivalents. And importantly, Bera. They're making Bera their primary treasury reserve asset.
This is a pretty bold move, essentially integrating a significant amount of cryptocurrency directly into their core financial strategy.
Another key promise is that they will hold a special meeting for their stockholders. They need approval for some of these deals, particularly the ones involving the cryptocurrency. This makes sense, as issuing a lot of stock or dealing with cryptocurrencies can have significant implications that shareholders should weigh in on. And here is something else to note. They're going to restructure their board of directors. They'll have 6 members, and importantly, they're creating a new digital assets committee. This committee will be made up of new directors nominated by Polychain Capital, a prominent crypto investment firm. 2 of these new directors will join immediately,
And 2 more will join after getting that stockholder approval. Plus, one of these new directors will become the chief investment officer. This signals a significant shift in leadership and a strong focus on digital assets.
They're also committed to filing a registration statement with the CC to register the resale of these shares and warrants. This is important for investors who might want to sell their shares or exercise their warrants later on.
Beyond the stock sales, Greenlane is also bringing on strategic advisors for their crypto business. They're signing agreements with these advisors, who will provide guidance for 3 years, with automatic 1-year renewals.
As part of these advisory roles, they're issuing warrants to buy another 5 million shares of common stock. These warrants have a nominal exercise price of just 1 cent and can be exercised after stockholder approval. This is another way to incentivize advisors and align their interests with the company's success. Now, a quick note on how these securities are being sold. They are being offered without a full registration with the SEC. This is common in private placements to accredited investors, relying on exemptions like Section 402 and Rule 506B of Regulation D.
The catch is that these securities generally can't be resold to the public without being registered or falling under another exemption.
On the same day, the 20th of October, 2025, Greenlane also put out a press release announcing all of this. They also shared an investor presentation.
These are common ways for companies to communicate important news to the public and potential investors.
Like most filings, this report includes forward-looking statements. These are essentially educated guesses and projections about the future. They warn that actual results could be very different due to various risks and uncertainties. You'll find more details on these risks in their annual reports.
The press release itself highlights the approximate $110 million in gross proceeds and their plan to implement a Barra treasury strategy.
And finally, the report is signed off by Barbara Scher, the Chief Executive Officer, on the 20th of October 2025. So, what's the big picture here? Greenlane Holdings is taking a really aggressive dive into the crypto world. They're raising a substantial amount of cash. Yes,
But they're also betting big on Barra, making it a core part of their treasury. The involvement of Polychain Capital and the restructuring of the board with a dedicated digital assets committee clearly signal a strategic pivot towards becoming a more crypto-focused company. The risks, as always, are significant.
Cryptocurrency markets are notoriously volatile, and building a treasury around a single digital asset like Barra carries its own set of unique challenges. The success of this strategy will heavily depend on the development and adoption of the Barricane blockchain and the Barra token itself.
they're also relying on stockholder approval for some key aspects, which is never guaranteed. However, the $110 million in funding, if managed effectively, could provide substantial runway for their new strategy.
The appointment of new leadership and a dedicated committee focused on digital assets suggests they're serious about navigating this new frontier. In my opinion, Greenlane is making a high-stakes bet. They're either going to ride the wave of emerging blockchain technology and become a significant player in the crypto space,
Or this pivot could lead to substantial challenges if the crypto market doesn't cooperate. It's a testament to the increasing integration of digital assets into traditional corporate finance. All right, that's our breakdown of Greenlane Holdings' latest filing. What is your take on this crypto-focused pivot?
Do you think it's a smart move or a risky gamble? Let me know your thoughts in the comments below. If you found this analysis valuable, please hit that like button. It really helps us out, and subscribe for more deep dives into corporate filings. Don't forget to join the Discord community linked in the description. Thanks for watching. See you next time.